OPEC members are expected to meet at the fringes of the Algerian oil conference this week. The Algerian energy minister has already said that all options were possible for an oil output cut amongst the OPEC members. Amrita Sen joined us now on the phone from Energy Aspects. Amrita, good day to you. This is an informal meeting, of course, for OPEC. What do you think are the chances of an agreement to cut at this week's meeting?
Good morning. I do think the chances of a cut are the highest they've been since 2014. In fact, I'd say 2008, when that was the last time OPEC actually cut output. However, it's still not a done deal. All the behind-the-scenes talks haven't necessarily bridged the gaps between Iran and Saudi Arabia. So I'm not necessarily expecting a full-fledged deal in Algeria, but the doors will remain open for further negotiations and possibly more action at the November 30th OPEC meeting.
What pressures are upon OPEC at the moment? Because I'm hearing that Libya and Nigeria, which have both been producing reduced levels of output now for some time, each want to ramp up production, along with Iran, of course, which is back on the international stage after sanctions are lifted. And of course, it's well headlined that the likes of Saudi Arabia don't really want to stop pumping because they need the income. It's a very difficult situation, isn't it, for OPEC?
Oh, absolutely. I think the biggest issue at the moment is GCC countries, which is Saudi Arabia, UAE, Kuwait, and Qatar. They've continued to pump higher output just when, as you mentioned, Iran has also come back to the scene. Now, Nigeria and Libya, their output will always remain far more volatile. Yes, you are likely to see them come back in the short term, but equally over the weekend, Nigeria saw another round of attacks, which meant one of their biggest output stream might be force majeure again this week. So that's going to remain volatile. We're going to see them come in and out of the market. The crux of the problem is the Middle Eastern OPEC production, which continues to go from strength to strength at a time when everywhere else production is falling. But we need OPEC production from the Middle East to stabilize, to start seeing stock draws. Otherwise, oil prices will remain low for a while, for at least next year, if not further.
Let me just quickly ask you about the outlook for oil prices, because here we are now about the 44.60 level. What are your thoughts on how the pressure is going to be on the oil price for the remainder of the year?
I think if we get an OPEC cut, and like we mentioned, this is actually a cut that's on the table, not just a freeze, balances will improve substantially because non-OPEC production has been declining massively. The latest print is 1.8 million barrels per day of year-on-year fall. However, if we don't get a cut, prices will remain around these levels. And if we get a warm start to the winter, we can probably test $30 again.
Do you see any much upside on the oil price? I mean, is there any chance, do you think, that we could end up going back up to 50? Clearly, there are a lot of aspects to look at here. You see the major risks on the downside rather than the upside?
We do think if there's a cut, we can easily trade into the 60s because balances have improved. We are drawing stocks, don't get me wrong. It's just that the pace of stock draws has been moderated by record OPEC output. If output from OPEC is curtailed, stock draws will be absolutely massive, and we will see quite a bit of significant pressure on upward pressure on prices.
Okay, Amrita, look, we've got to leave it there, but thank you very much indeed for joining us. Amrita Sen joining us there from Energy Aspects.